In the U.S., stock index futures moved higher today after the Dow and the S&P 500 registered their best month since March 2016. On Wednesday, the Dow ended January 5.6% up, while the S&P 500 rose 5.8% in the same period. Nonetheless, the season was affected by comments from the U.S. Federal Reserve that sent interest rates higher. The Fed decided to leave interest rates unchanged, but said it expects inflation to move up this year and to stabilize around its 2% target. As a result, bond yields rose during the session as traders grew confident that the Fed might step up the pace of policy normalization. Investors will be looking at fresh data and earnings. Today, in terms of data, ISM manufacturing new orders and construction spending numbers are both due out at 10 a.m. Eastern Time, followed by total vehicle sales for January at 3 p.m. Eastern Time. In earnings, Alibaba, Time Warner, Nokia, and Blackstone are set to report before the bell. Amazon, Alphabet, Apple, and Visa are due to release figures after the bell. And in Asia, indices traded mostly higher today after stocks in the region sold off earlier this week. The moves also followed moderate gains on Wall Street following the Federal Reserve's decision to keep rates unchanged. The benchmark Nikkei 225 index surged 1.23%. In South Korea, the Kospi edged up 0.13%. Over in Sydney, the S&P and ASX 200 gained 0.9% on broad-based strength across most sectors. Meanwhile, the Hang Seng Index gave up early gains to ease 0.44%. Mainland indices also showed declines. The Shanghai Composite fell 1.11% and Shenzhen Composite tumbled 2.4%. And South African lender Capitec says its credit rating by S&P Global Ratings had not been affected by a report from Visory Research accusing the lender of overstating its income and assets. According to statements from the bank, to date, the bank has experienced only mild funding outflows and its liquidity remains sound. S&P has rated Capitec BB+B with a stable outlook, which falls within the speculative range. The U.S. firm Visory published a report on Tuesday which said Capitec was a loan shark with massively understated defaults masquerading as a community microfinance provider, triggering a brief slump of 25% in its shares. And traffic will soar above the muddy swamp between Uganda's capital and its international airport when a new Chinese-built highway opens in a few months' time, but the road itself is mired in controversy. The government has funded the 51-kilometer four-lane expressway with a $580 million loan, part of $11 billion in borrowing in the decade since the World Bank canceled debts about a third that size as part of debt relief for poor states.
The country's first expressway should reduce the 2-hour trip between the capital and the international airport to 30 minutes. Begun in 2012, construction should end in May, missing the initial target by a year. But it's the price rather than the delays that have caused alarm.
We do not have a uniform unit cost, a standard unit cost to understand how much would a kilometer cost. It's not clear. So, but this stretch, very narrow stretch, very short stretch, 51 kilometers, to cost that much, it is something ridiculous. It is ridiculous.
Critics accuse President Yoweri Museveni, who has been in power for 32 years, of squandering debt relief and mortgaging much anticipated oil revenues before crude starts to flow in 2021. China alone has loaned the East African nation nearly $3 billion and is in talks for $2.3 billion more as part of its vast overseas development belt and road scheme. An Auditor General report noted the new road's cost per lane per kilometer is double Ethiopia's 6-lane Addis Adama Expressway, a road built by the same company, the China Communications Construction Company Limited, with more features like underpasses and link roads.
So generations to come will have to shoulder this burden because they will have to be taxed heavily and will have to pay. So that's why we are saying our country has been mortgaged. by Mr. Museveni. Even these Chinese who are coming here from even the commercial banks we are borrowing from, Exim banks and whatnot, the burden will finally come on our shoulders as Ugandans. So our children and grandchildren will have to shoulder this burden, which is very, very unfortunate.
The government says the criticism is misplaced.
The people that query the project cost for Kampala Entebbe Expressway need to look at the detail. What are the individual components of this project that contribute to the cost? And if someone can tell us that the cement on Kampala Entebbe Expressway was twice as much as the cement on another project, the Kampala Northern Bypass, then you can say, look, what was the cause of the high unit cost? But otherwise, if you just look at the per kilometer, it's misleading because it doesn't take into consideration the scope. But where we are seated as UNRA, we are comfortable that that project, the project cost is reasonable, and it was based on market value assessment, and we are confident that that project will derive value to Ugandans.
Slowing exports, declining agricultural output, and bureaucratic dysfunction have all taken a toll on Uganda's growth. We'll
be back in a moment. To stay with us.